Welcome to today's webcast. Before we begin, let's quickly go over how to get the most out of this session. Your main player area consists of 3 windows: video, slides, and a multifunction window underneath. Each of these windows can be moved, resized, maximized, or even closed. If you like to return to the default layout, simply click the Restore button on the bottom of your screen. The multifunction window is where you'll find some helpful tabs like questions and answers, an area to download any available materials, and speaker bios. You can also turn on closed captioning by clicking the CC button in the lower right-hand corner of the video player. If you have any technical issues during the webcast, please submit a question through the question and answer panel, and our producers will respond to you directly. Please submit all content questions through the questions and answer panel as well. Thank you and enjoy the webcast.
Hi everyone, good afternoon, and welcome to our webcast today, titled Fraud Challenges in Payments and Digital Banking. I'm Jenny Jonas. I'm a managing director at KPMG, focused on financial crimes in the financial services sector, and I'll be your host and moderator today. Before I let our speakers introduce themselves, I have a few administrative items that I've been told I have to go through. So firstly, today's event will not be offering or providing CP credits, so no quiz questions, no tests as we go through today's webcast. Secondly, you'll be able to submit content, questions, Q&A at any time throughout the webcast by using the questions and answers panel on your screen. If you have any technical issues throughout today's webcast, please use that location, that question and answers panel on your screen as well for that. And when the webcast is over, please don't close completely out of your web browser. The player will automatically refresh to display an exit survey. And if you could please complete that exit survey, click the submit button, we would really appreciate it. So with those few admin items out of the way, let me give our 2 speakers today, Christine Chan, Prince Harfouche, an opportunity to introduce themselves to you and give you a sense of their backgrounds and focus areas. Christine, would you like to go first?
Yeah, thanks so much. Christine Chan here out of our global payments practice. I lead our US non-banking practice, and we do all things from payment strategy, product development to implementation and transformation of payment systems, as well as optimization of those systems. My personal background, I'm from Australia. I've worked in Hong Kong, Australia, and now in the US for 8 years, and really been across the banking industry from operations, technology, and now sort of that payment transformation lens as well. Really excited to be here today. Hand it over to Prince.
Thank you, Christine. So my name is Prince Harfouche. I'm a partner at KPMG, and I focus on reg and compliance. Fraud is a big subject for us, and I've been working in this space, I would say, a little over 18 years. I started my career in this space as a data scientist, physicist to be specific. And I have worked with regulatory bodies, and we have worked with a lot of banks and consulting firms to solve the problems in how to really fight fraud and how to be able to be more effective in detecting it, resolving it, and handling the growing need in how to do this using machine learning and other applications. I'm looking forward to share with you some of the stories that we have seen in the market and some of the trends as well. It's an exciting time for us to go over this and share with you some of that.
Great, thank you both. And I have the pleasure of working with Christine and Prince frequently on fraud matters. So I'm really looking forward to this being a really engaging conversation this afternoon. So before we get started, just a quick look at our agenda for today. So as a starting point, we're going to talk about and center ourselves in some of the emerging fraud trends in the digital banking and payment space, and get Christine and Prince's thoughts and perspectives on these, given the work they've been involved in recently. We'll pivot slightly then to talk about the fraud management lifecycle, some of its core components, the challenges that we're seeing our clients face, and talk about all of that through a bit of a technology lens and data lens. And then finally, we'll wrap up with some discussion about some of the key technology solutions we're seeing be used across the financial services industry. And we'll leave a little bit of room for Q&A towards the end. So with all that said and all that admin, all the admin items out of the way, let's dive into these fraud risks, these emerging trends. Christine and Prince, and maybe we'll start with you, Christine. As we look at this slide, and there's a lot of great call outs here in terms of the top fraud risks that we're seeing when interacting with and dealing with our clients, including fintechs, I might add. Which of these do you think they struggle with the most, and what specific challenges or issues are they facing in regards to these trends?
Yeah, no, that's a great question. And I think, I can't not mention, instant payments and real-time payments. So, fraud has always been, an issue, since the beginning of time, since cash payments. And as we're seeing digitalization of payments and folk really utilizing e-commerce and digital payments, we are seeing the trends move towards fraudsters really getting in under the covers to commit authorized fraudulent activities. So with consumers really getting behind the covers with consumers to trick them into making authorized payments. And we do see that as probably one of the most difficult components for organizations such as banks to mitigate, because it requires a lot of education of their consumers as well, as they're trying to get them up to speed with the ever-changing sophistication of a lot of these fraudsters, essentially, or financial crimes. Together with that, educating consumers, there's also changes and trends of new products coming down the pipeline around how folk can pay. There's instant payments or real-time payments, and that all culminates with the new payment rails that's been released this year with FedNow and RTP with the clearinghouse, and then also Zelle in the last few years as well that we've seen come up to speed and be a real key player around how folk transact as well. So some of those areas around, instant payments is really causing fraudsters an opportunity to really hone in on those areas to get instantaneous payments and then take that cash out immediately. And we'll talk a little bit around how we're seeing different institutions combat that as well as we go through this document as well. So I think the two key things is, keeping consumers up to date with new trends around fraudulent activity, and then also new products coming down the pipeline, new rails as it pertains to FedNow, real-time payments, and Zelle products as well.
It's interesting, Christine, that you talk about customer education, because I was at a conference recently and got to listen to someone from a particular financial institution talk about the fact that they had set up, they educated their customers on, fraud trends and scams, things to look out for. But they had gone one step further too and established what they were referring to, I think, as break the spell teams. So essentially a subset of customer service representatives, fraud investigators, who had great persuasive power in a way, a great ability to demonstrate and articulate and get through to customers who'd been really pulled into scams, and romance scams being one example, and get them to realize the situation that they were actually in, because unfortunately a lot of individuals who get caught up in those sorts of situations, in those sorts of scams, really do believe that they are interacting with a legitimate person, a good person, and not a fraudster. So it's interesting that you raised that. It took me back to that conference. Prince, what are your thoughts on this slide and these emerging trends?
Something very interesting. We start talking about scams. And as we start going into the fraud realm, fraudsters had today a venue of things to select from. a wide venue. They go to a supermarket now because they have a lot of products and services and technologies to serve their cause if they have the sophistication and the intelligence to do it. But we need to segregate between two interesting types of fraud. If the fraud is being authorized, means if the fraud is being legitimately approved by the sender, if we talk about the case of a payment, or we talk about the case of a wire transfer or money order, that usually used to be the liability on the sender, on the victim, not on the bank or the financial institution. But if the transaction is unauthorized, basically somebody stole your identity, or somebody used your credit card, or somebody has sent something pretending to be you, usually the liability is on the bank, on the financial institution. And because of that, it goes against their operational reserves for losses. And for a long time, banks and financial institutions and fintechs focus on where the liability is, and mostly about the unauthorized transactions, identity theft and account takeover and other forms of fraud. Not necessarily spending tons of time and effort and leveraging the resources to go after the authorized one, after helping the victim and uplifting the liability. I would say one of the emerging things we start seeing today, the FTC start putting a lot of pressure on all financial institutions to start actually think about how to prevent fraudsters from victimizing the customers, even though they were subject to a scam. And that's where we start talking about scams. Romance scam, rental scam, shopping scam, investment scam. There are a lot of types of scams. And the way it goes, as a person who's trying to send money to another person, as for example, we talk about the help a person scam. I'm sending money to someone to help them in their problem. And what I did not realize, that person who's asking for the money is actually another fraudster. The same thing goes with the romance scam. Somebody who meet somebody online and they start talking and they build that romance story, and that person start asking for money. And basically these types of scams, the sender, as an example in money transfer or wire transfer, initiate that wire, and they have authorized it. Back in the days, banks used to say, and I'm sorry to say it, we cannot model dumb. We cannot build analytics to protect dumb actions. But today it's not the case. Today is like how to protect the victim, even though they're using your platform. They are an agent to your service. It's on you to start helping them, protecting them from not being scammed. That's why I'm saying fraud, if you're going to break it into two realms, this is the authorized and unauthorized. But that said, when you talk about fraudsters, the best thing used to be for fraudsters is to get their hands on the cash as soon as they can. That's why speed is their friend. Back in the days, credit card was their favorite tool to go and use their scams or try to steal your credit card, or try to actually use either a credit card present or non-present, depending if it's online or in person. But these days, the amount of services provided in the market to facilitate payments, it grew a lot. We start talking about real-time payments. The moment the payment goes in or processed, the money is gone. The other thing is we talk about digital banking or digitizing the services. There is no real interaction with the person. So the amount of sophistication to build some advanced biometrics today to qualify that the sender or the other end of the transaction is somebody who's legit, who is actually authorizing it, and you have identified that person is the person who owns the money, and basically it's a real transaction. That is going a long way. The amount of controls and the amount of intentions and resources that are being invested in real-time payments, in biometric analysis, in enhancing digital banking, all of that, I would say we start seeing a lot of attention start happening recently, but also we start seeing a lot of fraudsters move into that space because speed is their friend. They give them access to money quickly, and the controls are not as strong as in the other areas where they used to wait for it 2-3 weeks to clear out, like in a credit card case, etc. So yes, the space is interesting. fraudsters is actually building a business behind some of these newly developed services, like the P2P. You mentioned Zelle, right, Christine? The Venmo, the instant payments, like even Apple Pay. And we start talking about also, when we start talking about money transfers and wire transfers and ACH, all of that is becoming where we're seeing a lot of, I would say, increase or trends in where fraudsters are going and building their intelligence and platforms around it. So yes, the trends are shifting. Fraudsters are still good, but they're still getting better. The liability is shifting. In a sense, regulators are trying to put pressure on financial firms to not just worry about their own pocket, in a sense, not just worry about unauthorized transactions and what they will hit, what could potentially hit their operational losses, but also about protecting the victims.
And that's interesting, Prince. In terms of banking institutions getting pressure from regulators to protect the consumer, we are also seeing fintechs as well getting that pressure. And we know fintechs tend to sometimes, as banking as a service, for example, or embedded finance, may not get as much scrutiny from regulators as a traditional banking institution. But we are seeing a lot of these fintechs actually holding reserves to protect their customers, because now they are competing with banking institutions for the market or consumer share. So they do want to provide the same level of accountability that banking institutions are providing by ensuring they have appropriate reserves, making their consumers whole, as well as being responsible for preventing financial crimes through education and additional controls. And in this space as well, we're seeing, it's a little bit of a cat and mouse chase. So how much are fraudsters willing to spend to commit financial crimes and fraudulent activities? And how can banking institutions and fintechs, PSPs across the board, increase that cost for them? So when does it become, for them, expensive to commit fraud and fraudulent activities? Because banks and fintechs are getting more sophisticated around their financial crimes activities and how they're preventing fraud as well. So it's a little bit of a cat and mouse. It's really interesting to watch the industry move through this currently around the sophistication of fraudulent activities and how banking institutions are increasing their sophistication as well in terms of preventing financial crime.
Yeah, I think one of the ways that, Christine, I've seen our financial services clients, my financial services clients get more sophisticated is with this notion of, I guess, what's formerly being called fusion centers, but really at the heart of it is a greater level of interaction between fraud and cyber in particular, because there is a lot of information that is collected by cyber, is monitored for by cyber teams that the fraud teams can benefit from. I was talking with a tech provider in this space, one that mines data to connect cyber events to potential or actual fraudulent activity, such that you can essentially create mega SARs, which was very exciting to me from an AML perspective, this notion of a mega SAR. But they were able to, in this example that we were being shown, connect a cyber attack to multiple accounts. Multiple is probably an understatement, but multiple accounts that were potentially impacted by that cyber attack. And when I say impacted, I mean they were flagging them to say these accounts we think in some way were compromised. And so what the fraud team did with that was that what fraud teams could do with that, was that they could take that information and monitor those accounts more closely, but also increase the friction, notify the customer, right? They could modify their approach based on that information. And I thought that was really clever that this technology was able to do that. But as I said, it comes back to the whole notion of fusion centers that bring together at least those two units. Sometimes AML's in the picture, sometimes security teams, physical security teams are in the picture too, but certainly at the very least, cyber and fraud to really benefit from all of that intel, all of that information, because the bad actors on the other side are doing just the same. They don't see cyber in isolation to fraud. They are very much seeing it as two things working together in a way.
Yeah, no, this is so interesting. And I think that's why data is king when it comes to this. And it's making sure that you have, that data lake in place, it's secure. You have that transactional information as well to really know your customer, their spending patterns, how they operate, what is normal behavior versus what's abnormal behavior, because it is all about the customer or business experience as well as they're working with financial institutions or fintechs. So utilizing the data across the board that's connected between payments, the payment data, cyber as well as fraud to really, understand that user profile so that when transactions are coming through the pipeline, when to hold off or pause certain transactions due to abnormal behavior. When to freeze certain accounts when you're seeing a large number of duplicate payments coming in. And then that feedback loop as well. So, where is it occurring across the organization to ensure that it doesn't happen again? And that all stems from data and machine learning through anomaly detection and trends as well.
Yeah. I think that kind of neatly brings us on, Christine. I don't know whether you were hoping to tee this up, but I think that neatly brings us on to the next bit of content I think we're going to look to talk around, which was this fraud management lifecycle. Prince, I know you have perspectives on this visual. Do you want to kick us off?
Yes, definitely.
Yeah.
Yeah, thank you. I hope you can hear me. I know something with my signal is just took the video down. So what you're looking at in here, what we believe is, in a very simple way, what is considered the fraud management lifecycle. And if you look into the ingredients or the building blocks of what we look for and what are the things that matters in the fraud lifecycle or ecosystem, data collection and data management is one of the essential building blocks to be able to manage your fraud platform or the fraud detection platform very well. Data collection today is not as simple as it used to be, given the fact that we are using real-time capabilities, we're using digital fronts or portals. So what's happening is the data is not just what the data you get from when you did onboarded the customers. We're collecting data real-time and collecting it from multiple different areas. It's the transaction level data, it's the customer profile data, it is the data about where the transaction is being happening at point of sale, let's say in the case of the credit card. If you are doing the transaction through your phone, it is the details and the coordinates of your phone, the number, the device, serial number, and so forth. The data collection is important because it will help you and help whatever machine learning engine you have built in a place today, regardless if it's, I'm not going to call it outdated, but regardless if you have it for the last 10, 15 years or something that you have built very recent that leverage a lot of machine learning algorithms, you need that data that has to be collected real time. Now, a lot of clients and a lot of banks that we have worked with and helped, we realized many times I would say additional levels of data, I would say data attributes added, it will make your fraud detection much more accurate than you are then contemplating or leveraging different types of algorithms. Data is the main ingredient to be able to be more accurate on how you be able to detect a fraud when it happens. So that's why I'm trying to emphasize more on data management. Now, a lot of it is being, the banks invested a lot of money in it. The reason why, it will be qualifying if the customer is authorizing the transaction or unauthorizing it. Like we mentioned before, the highest liability if it's unauthorized. So they do all of the data collection to make sure that it's a legitimate transaction. It's been authorized by the owner. Now we go from that into when we start talking about fraud detection. There are different platforms out there and different fintechs and even homegrown capabilities built by banks and financial institutions to fight fraud. Fraud, I would say, for the last maybe 20 years, maybe 15 years, it was a set built in a way that a set of rules, even though they would call it, these rules are intelligent rules built on an actual statistical models, it was used to be able to detect the likelihood of a transaction to be fraud, or the likelihood of a person to be when you perform what we call entity resolution or authentication of the person who's initiating that transaction, you are actually qualifying that it's right and accurate and true. All of these fraud detections, from entity resolution to fraud detections to pattern recognition, it used to actually be built into a platform that's very specific to the product or the service that you are handling. If we're talking about a credit card, if we're talking about P2P payments, if we're talking about wire or money transfer, etc. What we start seeing, and as I go through the life cycle, I'm telling you what was the case before and what started happening after that. What we start seeing, a lot of effort is being spent to build more sophisticated, I would say, machine learning AI-based models to be able to do or detect things that it wasn't part of the previous platforms. Things about geospatial location. Let's say you are transacting on a credit card and you are actually in a different location that you usually perform your purchases, or where usually your point of sale is happening, and that add a flag into the system, and if multiple flags add up, it will actually detect you as a fraud and stop the transaction. But the issue with spending that effort to build machine learning fraud detection engines across multiple services, the liability on the owner to explain how it works. That's another area where we have seen our clients sometimes build a very sophisticated fraud detection engine. If they manage to explain it to regulators and document it very well, then it's great. And if not, sometimes they have to shift that capability into a more simplified, formal version of that. You may lose some of that fraud accuracy in detecting fraud, but in return, you will be able to explain it. Now, explaining it and explaining why you have seen it as a fraud is very important for two reasons. The first reason is to defend your stand, especially if you need to explain to the regulators how it works, how it is not biased, how it is not basically focusing on one group versus other group, how all of the data that's being leveraged and the approach is very compliant. Now, the second reason, which is even more important, is when it comes to case management, when it comes to customer experience. It's extremely important when you start stopping fraud is to take into consideration, yes, you are doing loss prevention. You are stopping the fraud from happening and you're stopping that loss. But if when you do that, you have to keep an eye on how the customer will react to that action, how the customer experience will be shaped. Because when you perform your fraud detection, you're going to end up with two unwanted outputs. Call them false positives and call them false negatives. A lot of the time, you will be able to stop a transaction because it was a fraud, and actually it is a fraud, and everybody's happy. You stop the loss. Sometimes you stop the transaction thinking it is a fraud, but it is not, and the customer is very unhappy. And the third time, when you stop a transaction and actually it is nothing wrong with it, I maybe flipped it. If there is nothing wrong with the transaction and you stopped it, the customer will be unhappy. And if it was a fraud and you did not stop it, the customer will be unhappy. So technically, if it's a false negative or a false positive, the customer experience will suffer. And that is where we start seeing a lot of emphasis on how to manage and educate the expected to educate the customer and manage expectations. Now, depending on the type of a product you're dealing with. Since I started talking about credit card, I'll give you another example of credit card. They start, as in the credit card space, they start making or building a channel of communication with the customer. For example, at point of sale, usually you receive a message within seconds, milliseconds, to say, is that transaction, is your transaction? Are you performing that transaction? Are you performing that purchase? Now, if the answer is yes or no, this is how you can tell. But even when you do that, and if you end up doing a lot of it, the customers will not be happy. So I like the term that Christine has mentioned earlier. It's the chicken and the bird. It basically, you need to prevent it from loss, prevent it from fraud losses, but in the same time, you don't want the customer experience to suffer. And what you're looking at as far as what are the building blocks you are using to protect your customers without having them to suffer through your false positives or false negatives. Basically, you need to strike a balance. Sometimes you need to lower your thresholds, accept some losses, and in return, to make your customer experience much better. Some other banks and institutions start spending a lot of time educating their customers on what to do and what not to do. But in short, it's a space that everyone has to actually spend the time, not just by detecting fraud and stopping fraudsters, but also by dealing with the customers. If they are subject to a fraud, they are the victim, how to help them. If they are not a victim and the system continuously stopping their transactions, thinking that they have, it's a fraud transaction, you have to explain it to them and why the system has detected or seen it as a fraud. So it's all connected. And I'm not going to add more to this view, but I hope that makes sense.
Yeah, no, Prince. I think it really does, and it resonates with me a lot because fraud teams very much have to have that customer focus in everything they do, and the fraud controls that are implemented are no different, right? You have to have that good balance struck between generating enough friction that you deter the bad guys, but not too much friction that you deter the good customers, the legitimate customers, the people who want to do business with you, and are good people in that as well. So, Christine, I'm interested to hear what you think are, putting that one to one side, that particular challenge of striking that right balance, what you think the challenges are when we think about this life cycle that Prince just laid out.
So, the fraud management life cycle during the transaction, is very important, but we don't want to forget about everything that kind of encompasses and surrounds this as well. So how are you onboarding new clients and customers? What is the process for account verification, ensuring that those customers as well during onboarding, any changes or monitoring to those accounts as well, that surround that as well. So that also protects the fraudsters want to do an account takeover as well to transact, fraudulent payments, for example. In addition to that, when we're thinking about the overall account and like customer management process, thinking about, new products coming down the pipeline. So as new products are being developed, new features are being developed for ways to pay as an organization, that fraud is involved upfront. So making sure that the fraud team and the risk teams are really involved right at the beginning during that product development to really understand how that product's going to work, to ensure that when those products are actually released to market, you're right there in terms of fraudulent activity as well and potential fraud cases. Because what we did see with Zelle, and you can probably feel that, if you use that product, when it was first released, it was a little bit of a free-for-all, and there was a large uptick in instances of fraudulent activity when it pertained to Zelle. And then as you've used it in the last sort of year or so, you can see banking institutions have really honed in on ensuring there's appropriate limits that are placed to consumers if they're paying someone new, or ensuring that there's a little pop-up that tells you, are you paying someone that you know? Do you know this person? etc.? Are you paying the right amount? So being involved from not only just the life cycle of when the transaction happens, but all around that surrounds that. So that's account openings, managing customer information, termination of customers as well, products as well, how they are changing constantly, making sure fraud is involved in that process. And then the speed of this process. We talk about making sure that we have appropriate investment for that feedback loop. How quickly can you work through investigations and case management to ensure that root causes and cross-channel risks are identified across all the different payment rails, and go back into the detection systems, go back into how you onboard new folk, go back into how you develop products as well. So really utilizing the knowledge from your consumers that come back to you around how to make the system even better and even faster.
Christine, you mentioned something that probably for the audience will seem so fundamental, and that's getting fraud stakeholders involved in conversations early when you're going to roll out new products and services. I can't tell you how many, and it's like I said, it probably seems too fundamental to be done wrong, but I can't tell you how many conversations I've had over the years with clients who are like, I want to roll out this product, or I want to roll out this service. And the first question you ask, because their focus is on what fraud controls can I put in place, is what are your fraud risks? What are you looking to mitigate? Have you documented that? Have you done an analysis on that? Do you know what tech or other controls you have to mitigate those risks today? Do you know what your existing tech stack does to help this particular situation? And it's only when you get to answer those questions can you really then think through the right way to move forward from a fraud risk management perspective with those new products and services. Too often, even today, seeing the product service development get ahead of where the risk point is, and they're integrating that aspect and those considerations too late. So it's really important to do even the fundamentals right when we talk about digital banking and payments.
No, absolutely agree. And I think this is why it's so important to have a connected enterprise to ensure that product and engineering and sales is talking to risk management, because I think everyone has different agendas across the organization, and that education piece around how important it is to manage fraud upfront and across all aspects of the business is pertinent.
Prince, do you have any thoughts on the challenges? I know you mentioned a couple, but I want to come back to you in case you have any more you want to mention. But any other challenges that you see clients having when you reflect on this life cycle, and particularly on digital banking and payments?
I would say that you're spot on when you were saying that, especially when you talk about, for example, launching a new service or even providing digital services for what the bank or the fintech is trying to achieve. What we have seen as far as the challenges when you look at this life cycle, actually few. One of them, there are a few technology firms or vendors that provide specific type of services in different areas. Some vendors are specialized in data collection of biometrics. Some businesses or fintechs are specialized in the fraud detection space, specifically about transaction analysis. Others are more specialized in entity resolution, understanding and authenticating the sender. And they're all wonderful, all great, regardless if they have some limitations in certain areas or strengths in other areas. What we have seen interesting, some of the banks and financial institutions trying to bring some of these vendors together to help them manage the life cycle. And when they have a problem is how to stitch it all together. That's a major challenge. What happens is when you do the data management, data collection, you end up dealing with 3 vendors, sometimes 4, if not more, depending on how many services you provide. Are you providing wire, money transfer? Are you providing credit card, etc.? And how to make these Vendors, or call them these platforms, connect effectively to provide you what you are intended to have from the beginning to manage the life cycle, honestly, is a nightmare. Add to that complexity, and again, I'm just giving you a very high view of what we have seen. When we start talking about real time, when we start about speed of processing, speed of actually accessing data and making a decision about the data, also that adds things to the mix, making it even more difficult. We're not talking about here money laundering. We're not talking about financial crime. We're talking about fraud, which has to happen very quickly. Mm-hmm. Now, in certain cases, within milliseconds, that's your tolerance to respond, to decide. In other cases, you may have minutes or maybe a little longer. But that is where things are getting interesting. The other, again, I can go on with a lot of challenges, but I would say the very obvious thing that we have seen is when you try to stitch multiple capabilities through vendors and platforms to be able to manage this life cycle. And that is a major challenge.
Yeah. I'll throw out one other challenge there, and maybe it's stating the obvious, but I don't think necessarily the fraud types that we see, synthetic identity fraud, check fraud, application like documentation fraud, like those change per se, but the ways in which they're committed, I think, can cause challenges for financial institutions. I think most recently, we've been seeing an uptick in deep fake, the technology and its usage, and it impacting financial institutions. And the challenge that it makes me think of is that fraudsters are coming up with more sophisticated techniques, whether you're talking about deep fakes or you're talking about the way they manipulate checks. Technology sometimes needs some time to catch up. And so what you end up having to fall back on is, your fundamental, your basic controls, right? Monitoring for changes, material changes in activity, customer education, some of those very fundamental ones, until the technology gets a chance to catch up, until you can get access and bring in-house resources who have the knowledge and skill sets even to develop the type of technology you're looking for as a homegrown solution. So I think that's part of the challenges too. And when you talk about digital banking, it just gets a bit more complicated. Is that lag between, I see a risk, I need to mitigate it, I have limited arsenal until the tech vendors catch up to really fully attack it the way I would want to. So I think that's another challenge that, or frustration maybe, that's experienced across the industry.
No, 100%. I would say this. Somehow I have to say this. Technology maybe is ahead of us, or the rate of adoption of the mainstream fraud detection or financial institution and fighting fraud is not adapting the rapid change of technology that's happening, like the fraudsters doing. Mm-hmm. And to your point, it's interesting you mentioned check fraud. Checks, I think, the intention from actually sunsetting checks, nobody will be using checks, was in the plan for a lot of firms and banks, like we're going to stop using paper checks. And somehow, because it's an old technology, it can be altered easily. There's a lot of issues with writing a check and somebody just open the mailbox and just do whatever they do with it. It was old, and there are a lot of scams that has been there, and slowly and gradually people stopped using checks, and slowly and gradually fraud cases are not as prominent or significant as it was before.
Right.
But like you pointed, as we start entering the COVID era, where checks is back into the use in a very big volume, fraud in checks start picking up like crazy. So fraudsters always, they look into it. Basically, they follow the money, they follow the volume, they follow the intensity of transactions, this is where they hide. They do the layering. This is where they can do their fraud thing, right? So eventually, the two things are very important to fraudsters, and this is how they can do very well. They use technology to their advantage, and technology is advancing quickly. You mentioned deepfake. Eventually, if we need to do fake biometrics with deepfake, that's possible if you're doing face recognition on your phone to open the app and pay. So you see, fraudsters are adapting the change while mainstream banks will take them time to change their infrastructure to be able to look into this. But like I mentioned, fraudsters have two things important to them. Speed to get their hands on the cash, and they go where the volume of transactions are. I would say back in the days, the credit card was the most and biggest area where they do a lot of their cases. Now, it's where P2P, wire transfer, money transfer, ACH, because it's faster and the volume. People start relying much more on the Venmo, the Apple Pay, the Zelle than moving into the credit card. So it's interesting. So yeah, fraudsters are very smart. They use technology very well. And if they're good at what they do, it's hard to fight them, honestly.
Yes, yeah, constantly chasing. We were touching on a bit of technology there, so I just want to make sure we have time to cover off the last part of our agenda, which was really talking about and unpacking some of the technology solutions that we're seeing be used by our clients. Prince, do you want to take a first pass at kind of covering off your thoughts on the main technology solutions that are out there that can help mitigate fraud risk where digital banking, digital payments are concerned?
Yes, that's a question to me. I'm sorry.
Yeah, that's fine, Prince. Yeah, it's a question to you.
So,
I know you're in technical issues, so yeah. Sorry about that.
I would say we mentioned when we went over the fraud life cycle, the moving parts. What you're looking at, if you had the chance, look into this slide and trying to go into it, there's the account acquisition, the authentication, the account management, the money movement. These are kind of like functions within the life cycle. And I would say the list that you're looking at in here is some of the technology firms out there. It's not inclusive to everything. There are a lot of others. And some of these firms, we have a good relation. Some of them, we may not have a relation. So we have picked what we have seen. There is no specific reason why we picked one over the other. So I hope that's clear.
No favoritism then.
Yeah. But BioCatch is a very good fintech that they do biometrics and behavior biometrics, and they are specialized in that. I would say, again, Feature Space is another platform where we have seen they do a lot of fraud detection. They use heavily data science and machine learning, and they are creative in doing it. If you talk about, I would say, authentication and logins, I'll give you an example, LexisNexis. Everybody knows LexisNexis. They give you insights about the customers to know if the information you have collected about the customers are real. Now, of course, they have different flavors or profiles of customers and what kind of data you can have access to. It depends on what type of fraud we're dealing with. If we're dealing with high-profile fraud, capital market fraud, or payments fraud, every type of fraud and every service and every product may have its own fintech application and data sources. It's a very big space. Again, I'm not going to go into the statistics of how much fraud is happening in the world. But again, each one of these either will have the platform, the analytics, or the data sources, the insights to help you perform your functions effectively through a life cycle. Look at the Quantexa, which is the entity resolution platform. For example, Quantexa, we have a very good relationship with. We are alliance with them. But what the Quantexa do, they take information about the individual and they process that information to give you a score to explain if the likelihood of that person is you, not fake, not a takeover case, not somebody who's pretending to be you, and they do it in a very fast, rapid pace, basically close to real time. So again, I'm not gonna nice actimize. another platform, which everybody knows about. They are dominating the trade surveillance and trade fraud space in the capital markets. And the same thing, also, they have a very strong presence in the payment space, the credit card space, where they have a very strong fraud detection engines and case management capabilities. So again, the technology solutions out there and the firms and vendors who provide services and services and of course capabilities to help enable your fraud detection and fraud lifecycle, there's a lot of out there. My advice is to those who are building the platform is not to have so many vendors stitched into the life cycle, because it's going to be hard. Yeah, sorry, Christy, go ahead.
I was just saying it is a balance, right? To make sure that you have the appropriate ecosystem of vendors in place, customized to your organization. But we are also seeing organizations also build tools internally. So it is that balance of internal need plus also the different platforms that are available, third parties that are available.
Yeah,
I agree.
There's definitely a trend today. I feel like it's common across all technology spaces, not just fraud technology, to reduce that tech stack and make it more streamlined. We're working with a client right now, looking at their fraud tech stack, looking for a replacement for one of their vendors, but in doing so, certainly given or considering the technology that's already in place, but what any new vendor can potentially do, as opposed to just analyzing them and looking at them from a perspective, if I need you to solve X problem, I have, A, B, C, and D problem. I don't need help with that now. I've already got tech to provide that. They're going in with a fresh set of eyes and saying maybe there's even a better technology provider for all of these things out there. So while you're looking for this for me, please look for this for me, and help us, reduce our tech stack.
It's continuing to refresh that too, because with real-time payments coming through, you need these vendors to be able to identify fraud prior to the transaction. Because once the transaction goes through, final. So it's rethinking, are these vendors looking at fraud on a batch basis, or are they able to do it, real time prior to the transaction happening? So definitely need to look at sort of the products coming down your pipeline, what's in your future strategic plan when it comes to a payment perspective, to ensure that your vendors continuously are up to speed and meeting the needs of your organization. Not
too many organizations will periodically take a good look at their the technology that they use and really apply that forward thinking lens, Christine, to them, and really consider whether they're fit for purpose going forward. And I think the other thing that we tend, as a society, maybe not so much specific to the financial institution sector, but or financial services sector, is to something new and shiny is evolving and coming up, and this new technology is really exciting and might be able to help me. And then not really give it enough due diligence. Unfortunately, with probably the best intentions, tech vendors will indicate that they can do X, Y, Z, and then fail. I've definitely heard of this, fail to be able to follow through on that. So super important whenever you're looking at a tech vendor to get a proof of concept done, so you understand its limitations, its abilities, and everything in between before you fully commit. And a lot of vendors can do that very quickly these days, because a lot of them are based on low code platforms. They can show you and demonstrate to you what they can do in a matter of a week, sometimes two, depending on how complex your ask is. So it's very doable, and these days doesn't take a lot of time on your part as a financial institution, as the end client to that vendor, not too much time on your side to see that demo, that proof of concept. So well, Christine, Prince, thanks so much for your insights on all of that content that we brought. This does bring us to a point where I wanted to check if we had any questions come in on the chat. I'm just going to do a quick scan down. I know we touched a little bit on this one earlier on, we talked about a bit about Gen AI. I don't know if we touched on this aspect because we were talking about deepfakes and the like, but I don't know if we touched on really how it can help mitigate fraud risk in the digital banking, digital payment space. Do either of you have thoughts on that?
Right, and I know Prince and I were talking about how this question continuously comes up just because Gen AI is the next biggest thing. And we talked about how folk are definitely investing to playing this space, but it hasn't really solved, broader sort of issues and trends in fraudulent activity. Machine learning is definitely in play right now, and in artificial intelligence, but Gen AI is still sort of being looked at. What are you sort of seeing, Prince? I know you've had a few questions in this space.
Well, I would say this. Gen AI is the capability of the future. And I don't believe we are using it today to go away. It's here to stay. And I believe that the mainstream banks and the mainstream financial institutions will start leveraging some of the Gen AI capabilities in their current risk management platforms. Now, I'm not saying today it's being used. I think today it's being looked into, piloted. Probably there are experimentation efforts. I'm not seeing early adopters taking over the market with it. Maybe fraudsters taking advantage of Gen AI more than the actual institutions. But if I would say, if you want to invest in actually getting the best return out of your platform, where if you're building the fraud detection, the best way to do it is to look into how you can improve your fraud detection. In many cases, for a lot of clients we have worked with, improving fraud detection, if you improve your fraud by 1%, let's say you're talking about 6 to 7% is the average decline rate a month, and if you can increase it 1 to 2% without increasing your false positives, that is a lot of return for actually the effort of actually enhancing it is just using AI, or not just using AI, is actually leveraging AI effectively. But that is where the first thing that comes to mind if you want to really leverage AI in an area today that everybody's looking into, how to use AI and machine learning much more effectively to increase my fraud rate detection, or without necessarily falling into more false positive or noise to piss off my customers.
Yes, definitely baby steps. Definitely baby steps. So, all right. Well, listen, we are quickly running out of time today. We want to thank everyone again for joining us on the webcast and for sending in your questions. We had a couple more, which unfortunately we won't have time to get to. But before we close, just a few housekeeping items. There'll be a replay of today's webcast available on our website. Please feel free to share this information with your colleagues who weren't able to join us today. And certainly feel free to reach out to myself, Christine, or Prince if you have any other questions or want to talk about anything fraud, digital banking, digital payments related. When the webcast is over, please don't close out of your web browser. The player will automatically refresh to display an exit survey, please. If you don't mind completing that exit survey and clicking the submit button, we would really appreciate it. And then last but not least, before I say thank you one more time to everyone who joined us today, thank you, Christine and Prince, for sharing your thoughts and perspectives on this topic. Thank you, everyone who joined the webcast today. If you need further information, as I said, please don't hesitate to reach out to any of us. Thank you and have a lovely day.